Sacci's business confidence index was marginally down to 98.4 in September from 98.6 in the previous month. Joining us in studio now to discuss this and more is Neren Rau, his CEO of Sacci. Thanks so much, Neren, for joining us again.
You.
Well, taking a look at the numbers, a slight pullback coming through in September. The strong decline that we saw up to the July 2011 period certainly being curtailed at this point, in line with your broad expectations?
Yes, we didn't expect a positive outcome this month. Ever since we've rebased the BCI, we've based it against 2010 as the year that would now equal to 100, whereas historically it was 2005. One would expect that the BCI would perform positively because 2010 was a very poor year. But for the last 3 months, we've seen levels below 100, meaning that for the last 3 months, we've experienced levels of economic activity and business confidence below those experienced in 2010, which is quite disturbing. The context for that, of course, is the global economic conditions, but of course on a domestic front we're also failing to find that stimulus that will get our economy to a more productive level.
Just how much of a silver lining do you see in the fact that at least the pace of the slowdown is slowing down?
It is something to hold on to from a point of view of optimism, but it is still not ideal in the sense that one needs to see the BCI accelerating as far away from 100 as possible. So we're below 100, and while we remain there, we will remain concerned. If 2010 was a strong year from an economic performance point of view, then we wouldn't be concerned. Then we know that we're striving to achieve the similar
But at this
level.
point, we're coming off a very low base, so this
Absolutely.
indicative of just how negative things are. Let's drill down into some of the sub-indices representing real economic activity in the country, because within that component, we've had 4 of the components register positives, but despite that, manufacturing, which is of course at the heart of the South African economy, still in negative territory, and that perplexing at this stage.
That's correct. That is quite worrying, given that manufacturing is negative on both a month-on-month as well as a year-on-year basis. The fact that the other components that look at the real economy are positive is quite heartening. It gives us optimism that in the coming months we may see improvement, but we do believe a lot of work has to be done. Individual businesses have to look at the activities and try to determine how to stimulate those activities on a micro level, and that would drive these positive readings into more sustainable territory. Right now we have, as can be expected, vehicle sales positive. We had very strong data coming out of that sector. Retail sales also positive, and that is something to hold on to again from a point of view of being optimistic. And both exports and imports reading positive this time round, and that's something we haven't seen in a while. For a while, one of them always dodged the positive reading and the other continued to be positive. But now on a month-on-month and a year-on-year basis, we see exports and imports being positive. But one does have to read that with some air of concern given the outlook in the global market.
Absolutely, and I mean a lot of that or precursor to that kind of caution that's out there coming through in the trade numbers that were released late last week. Let's hone in on construction as well, because along with manufacturing, that's a sector of the real economy that remains in negative territory as well.
Yes, construction we expect to lag positive improvements in the rest of the indicators and to lag the economic cycle. So we're not too concerned with the fact that it's negative on both a month-on-month as well as a year-on-year basis right now. Once the others start or continue with their positive contributions on a sustainable basis, we expect that construction will turn around and follow suit. It's not to say that it's at acceptable levels, but it's of much less concern than manufacturing. Yeah.
In the financial environment, we've got on balance things looking positive, but let's highlight there again, because all of the sub-indices within this component remain susceptible to the global developments and what plays out in the global financial arena.
The financial component of the survey has been the shining light through the negative times. It has always been fairly positive. This time round, although the real economy has been the positive aspect of the survey, the financial component has been neutral largely in terms of the readings of on real private sector borrowing, real financing costs, precious metal prices and inflation, all of those neutral. Most of those, though, still looking positive on a year-on-year basis. So there's still room for growth and improvement driven by the financial sector, but one wants to see it complemented or work hand in hand with the real sector components of the BCI.
Because if it doesn't, then you've got business still under pressure where costs are escalating, for example, and you're unable to pass on costs to consumers out there who form part of that real economy.
Quite right. The market just isn't there for you to pass on costs, unfortunately. And of course, when one of the components are positive and the other remains negative, then one wonders about the sustainability of the positive positive performance. It is, however, currently looking closer to the ideal, where we have the real sector driving the positive improvements. And that is something we want to look forward to in terms of an improved outlook for the coming months, perhaps not so much in 2011, but more so for 2012. We also believe now is the time for dramatic action on the point of view, from the point of view of business leaders, but also from the point of view of our partnership with government. And our president, the president of Sacci, has called for an economic codessa with some urgency, and we're working on a proposal in that regard. And it's a dramatic term to use, but fundamentally our desire through this economic codessa is for business, government and labour to work in tandem, not for one to respond to proposals by the other, but to work in tandem towards a strong growth path to recovery for 2012.